One bank, one single institution now controls more physical silver than the United States government, more than the entire COMEX exchange, and more than most countries could ever dream of owning. While you were told for 15 years that silver was a dead asset, while you were told to keep your money in a savings account earning 0.1%, they were quietly buying. They were accumulating. And now they just switched their entire position. They are no longer betting against silver. They are betting everything on silver going vertical. JP Morgan Chase now sits on a hoard of 750 million ounces of physical silver. That is nearly one entire year of global mining production sitting in one bank's vault. Why? Because they know something you don't. They know the supply chain is broken. They know China has just restricted exports. And they know that the greatest wealth transfer in commodities history is about to begin. The question isn't whether it will happen. The question is, did you miss it completely, or is there still time to position yourself before the doors close? Welcome to the Dollar Watch. Let's look at the numbers. To understand how one bank cornered the global silver market, we have to go back to the scene of the crime, 2008. The financial crisis wasn't just about subprime mortgages, it was about a massive, hidden short position in the precious metals market. Bear Stearns, one of Wall Street's titans, was collapsing. But Bear Stearns had a dirty secret. They were holding one of the largest naked short positions in silver history. They were betting billions that the price would fall. When the bank failed, someone had to absorb that toxic position to prevent a systemic collapse of the commodities exchange. Enter JP Morgan. At the behest of the Federal Reserve, JP Morgan bought Bear Stearns for pennies on the dollar. But along with the buildings and the employees, they inherited that massive short position. Now, a normal bank would have tried to unwind it immediately, but JP Morgan isn't a normal bank. They saw an opportunity. Instead of closing the short, they used it. For 15 years, they used that paper leverage to suppress the price of silver. Every time silver tried to rally, a mysterious wave of selling would appear on the COMEX, smashing the price back down. And while the price was artificially low, JP Morgan was using their other hand to buy physical metal at a discount. This was the greatest accumulation phase in history. They pushed the price down with paper, and they bought the real thing with cash. They paid a $920 million fine for manipulation in 2020, the largest in history, and they didn't even blink. Why? Because a billion-dollar fine is a rounding error when you are building a trillion-dollar position. Let's look at the data because the scale of this hoard is almost impossible to comprehend. In 2012, JP Morgan held less than 5 million ounces. By 2015, they had 50 million. By 2019, 150 million. Today, in January 2026, credible estimates put their total physical holding, including metal held in London and private vaults, at roughly 750 million ounces. Let's put that number in perspective. Every silver mine on planet Earth combined produces about 830 million ounces a year. That means JP Morgan essentially owns the entire 2025 global supply. If every mine in Mexico, Peru, and China shut down tomorrow, JP Morgan could supply the world for a year all by themselves. The COMEX exchange, the place that supposedly sets the global price, only has about 32 million ounces of registered silver available for delivery. JP Morgan has 23 times more silver than the entire exchange. They have cornered the market not by buying futures contracts like the Hunt brothers did in 1980, but by buying the physical bars. This is a critical distinction. The Hunt brothers failed because they used leverage. They bought on margin. When the regulators changed the margin rules, the Hunts went bankrupt. JP Morgan has no margin. They own the metal outright. You cannot margin call a bank that owns the asset. They are immune to the regulatory traps that killed previous squeezes. But here is the news that changes everything. Between June and October of 2025, market data suggests that JP Morgan did something unprecedented. They closed their short position. For the first time in 15 years, the bank is net long. They are no longer benefiting from low prices. They now need prices to go up. The accumulation phase is over. The profit phase has begun. Do the math on their profit potential. Every single dollar silver rises adds $750 million to their balance sheet. If silver goes from $100 to $200, a conservative target given inflation, JP Morgan makes $75 billion. If silver hits its inflation-adjusted high of roughly $600, they are sitting on a $450 billion asset. They didn't accumulate this metal to sell it for a 10% gain. They accumulated it to ride a repricing event. They know that the industrial demand for silver is colliding with a supply cliff, and they positioned themselves to be the toll booth keeper for the global economy. While JP Morgan was locking down the West, something even more dramatic happened in the East. On January 1st, 2026, China implemented strict new export controls on silver. They recategorized silver as a strategic critical mineral, placing it in the same restricted bucket as rare earth elements. Why does this matter? Because China refines roughly 65 to 70% of the world's silver. They are the bottleneck. Before these restrictions, China exported thousands of tons of silver to the rest of the world. Now that supply is trapped inside the Great Wall. China isn't doing this to be mean. They are doing it because they did the math. China produces more solar panels than the rest of the world combined. They produce more EVs than anyone else. They know that their own industrial demand is about to exceed their supply. They cannot afford to export silver anymore. They need every ounce for their own economy. This creates a bifurcated market. There is silver inside China, and there is silver outside China. And the silver outside China is getting drained at a terrifying rate. The West is now cut off from its primary refiner, just as demand is exploding. Let's talk about that demand, because this is the part most investors miss. Silver isn't just money. It is the most conductive metal in the universe. You cannot build the modern world without it. Take solar panels. The industry is shifting to TOPCon technology, which uses 50% more silver per panel than previous generations. By 2030, the solar industry alone will consume 20% of the annual global supply. Take EVs. An electric vehicle uses up to 50 grams of silver, compared to maybe 20 grams for a gas car. With EV mandates rolling out globally, that demand is locked in. But here is the new one. Artificial intelligence. AI requires massive data centers. Those data centers require millions of high-performance servers. Every single one of those servers relies on silver for its connectors and circuitry because silver doesn't overheat like copper does. Microsoft, Google, and Amazon are building AI infrastructure at a pace we have never seen, and they are competing for the same limited pile of silver as the solar companies and the EV makers. And finally, war. A Tomahawk cruise missile uses 15 kilos of silver. With geopolitical tensions rising globally, governments are ramping up defense spending. The military-industrial complex is a massive, price-insensitive buyer of silver. They don't care if silver is $50 or $500. They need the missile to work. So demand is vertical. What about supply? Can't we just mine more? No, we can't. 70% of silver comes as a byproduct of mining other metals: copper, zinc, and lead. Miners don't dig for silver. They dig for copper and find some silver on the side. This means that even if silver goes to $500 an ounce, miners can't just ramp up production. They would have to flood the world with copper to get more silver, which would crash the copper price. Primary silver mines, mines where silver is the main product, are rare and getting rarer. We haven't found a major new silver deposit in a decade, and even if we found one today, it takes 10 years to get a permit and build a mine. The supply response is a decade away. The demand crisis is today. We have been running a structural deficit for 5 straight years. We are consuming more silver than we mine. The only reason the price hasn't exploded yet is because we have been eating into above-ground stockpiles. But those stockpiles are critically low. The London vaults are draining, the COMEX vaults are draining, and JP Morgan owns whatever is left. This physical shortage is starting to break the paper market. The COMEX operates on a fractional reserve system. For every ounce of real silver in the vault, there are roughly 24 paper claims. People who think they own silver but actually own a contract. In normal times, this works because traders settle in cash, but in a shortage, traders start demanding delivery. We saw this in the first 2 weeks of January. 33 million ounces were pulled out of COMEX vaults. That is 26% of their entire registered inventory gone in 7 days. On January 7th alone, JP Morgan delivered 8.1 million ounces. They provided 99% of all the metal delivered that day. Think about what that means. JP Morgan is the only entity with enough metal to satisfy the market. They are the liquidity provider of last resort. When they decide to stop delivering, when they close the vault door, the COMEX defaults. We are already seeing the cracks. The physical premium, the difference between the paper price and the price for real bars, is exploding. In Shanghai, silver is trading $40 higher than in New York. In Dubai, it is $70 higher. The paper price is becoming a fiction. The real price is what you have to pay to get metal in your hand, and that price is skyrocketing. This brings us back to you. Why does this matter to your bank account? Because we are witnessing a wealth transfer from those who hold paper assets, cash, bonds, unbacked contracts, to those who hold real assets, physical metal, land, commodities. JP Morgan understands this. That is why they spent 15 years swapping their fiat profits for hard silver. They know that the dollar is being debased by $2 trillion annual deficits. They know that the bond market is mathematically insolvent. They are positioning themselves to be the kings of the new commodity-based monetary order. If silver returns to its 1980 inflation-adjusted high, we are looking at $600 per ounce. From today's price, that is a 6x return. But the risk-reward ratio is what makes it compelling. The downside is limited by the industrial floor. Companies need the metal. The upside is uncapped because of the monetary premium. You have a choice right now. You can trust the system that tells you inflation is transitory and the banks are safe. Or you can look at what the biggest bank in the world is actually doing with its own money. They aren't holding cash. They are holding silver. So what is the strategy? First, ignore the spot price. The spot price is a manipulated number set by paper trading. Focus on the premiums and the physical availability. If you can find silver, buy it. The window to acquire physical metal is closing because dealers are running out. Second, watch the COMEX inventory levels. If registered silver drops below 20 million ounces, we are in the red zone. A default becomes mathematically probable. That is the moment panic buying will set in. Third, watch JP Morgan. If they stop delivering metal into the market, the game is over. That is the signal that they are letting the price run. I am not a financial advisor. I cannot tell you what to do. But I can tell you what I am doing. I am following the big money. I am accumulating physical metal while it is still available. I am viewing this as insurance against a currency crisis, not just a trade. 10 years from now, you will look back at this moment. You will either say, I saw the signs. I saw JP Morgan hoarding. I saw the shortages, and I acted. Or you will say, I saw it all, and I did nothing. JP Morgan made their choice. 750 million ounces of choice. China made their choice. The industrial giants made their choice. The transfer of wealth is happening whether you participate or not. The only question is which side of the transaction you will be on. If this video opened your eyes to the reality of the silver market, hit the like button. Share this with someone who needs to wake up, and subscribe to the Dollar Watch. We are going to keep tracking the vaults, the banks, and the real numbers until this crisis resolves. Stay sharp. I'll see you in the next video.